Dear fellow trader, I hope you had a great trading journey in 2023. In these charts, I would like to talk about how market moves. Usually in market, in most tickers, we have a sharp move followed by a consolidation and another sharp move, which could be in the same direction or in the opposite direction. Here you can see the QQQ chart. If you're looking at this after a sharp decline, we had a consolidation, then sharp bullish move. Now we are entering a complex correction or consolidation. The consolidation or complex correction, they have one thing in common. They are very unpredictable. One day is positive, the other day is negative. And if you are looking at the candles, here you see more red with less green in between. Here you see total randomness. Here you see more green and less red. But if you are looking at this pattern, it is the same as this. It is more similar to this pattern. So from technical point of view, this is where market run out of steam or momentum started to go down. On the other hand, from psychological point of view, we can say after any sharp movement, investor and traders start to think if market can go in the same direction or not. This leads to profit taking for some and taking opposite position for some other and cause this chaotic pattern in the market. So when we are talking about total randomness or consolidation, it is hard to trade in these areas. There is high volatility and lots of opposite candles and in total randomness. But if you're looking at these trends area, you have the higher chance of success. So this is not just a triple Q. We can go watch it the same pattern. You can see the same pattern of sharp decline followed by consolidation going up and another consolidation in SPY. We can say this line is acting as a resistant pattern, and this is what most people call it. Um, but this is like a border that price can react to it, and it's like the basic uh, price action pattern that you can see. The same thing is happening in the IWM, or uh, you can see it the same pattern, sharp decline, sharp bullish pattern, and then consolidation. In ARK Invest, you can see that Apple experienced the same thing. However, Apple experienced a V-shaped recovery. This V-shaped recovery is less common than the pattern that we experienced in the previous chart. For Meta, we see the same pattern, consolidation, then trending up, now another consolidation or complex correction. AMD, sharp decline, consolidation, sharp upward move, and another consolidation. The Netflix also experienced the same pattern if you are looking. So it was a consolidation. These consolidation area can sometimes be very wild with a very big range, could be even 20% range. If you are looking at this pattern, these are in alignment with Wyckoff analysis as well, like markup, markdown, and a transition phase in between, which could be a redistribution or accumulation. So this is like 100-year-old method of analysis where we experience a sharp move followed by a redistribution or reaccumulation or accumulation or distribution. It depends on how long it takes. So this is a very good approach to market, and you can use this approach and benefit from it. And if you're looking at today market, uh, gap down, then experience a sharp move, and now we are experiencing everything become negative once again. Today we had the CPI, core CPI, and inflation year over a year data. uh, it was really hard to predict this is going to happen, but uh, as you are looking at this, we reached this level and we see a sharp decline. I believe that the market momentum in January dies in February. If you are looking at the outcome of the past 70 years, you can see that February is usually neutral. Like, the average return in February is 0.1% in all these bullish years. So don't expect anything special from February. It is definitely not as good as January. It shows that by now that February is not going to repeat the January's return. It will be very volatile. My expectation based on what we see in the market is that a choppy market or a bearish one is the most likely. Choppy to bearish is most likely for February. Thank you for listening to me. I hope you have a good trading journey using my analysis. If you like this type of videos, please subscribe to my channel and stay tuned for the future videos.